Afternoon. Today is September 15th. I am Scott Forcino, an associate broker in Real Brokerage based in New York and Florida. I put together PlugIntro so that real estate professionals and their contacts and clients can meet who they should know. Through the power of loose connections and some reciprocity, it's possible to build strong, long-lasting relationships. I have with me today Jessica Wells, who's a host. She does a great job of her PlugIntro platform with a lot of members. She is a mortgage professional, Clear Choice Mortgage, outside in Olympia, Washington, in the Great Northwest. Beautiful place. I've been a little bit near there. And we're going to talk today about some of the challenges in the shifting market and how Jessica positively impacts her clients and contacts and prospects. Good afternoon, Jessica.
Good afternoon. How are you today?
I'm happy. Yeah, it's a Friday, but that doesn't mean much in the real estate world because we're getting Friday phone calls and Saturday morning phone calls.
Yep, exactly.
I'm curious. It's mid-September, so we're changing seasons. And what's been your experience in the recent past, and what's your forecast?
We're seeing that rates are a little bit higher than what we had expected them to be at this point. So we're having a slower market right now, really, with buyers coming and going. A lot of people are just trying to make the decision if they want to get rid of, if they have a house right now, if they really need to make that move, or whether they're going to hold on to their house and do something different with it, use the equity for it. But we're still seeing a lot of, I do a lot of veteran loans. And so I see a lot of veterans coming into our area that we've been working with a lot lately.
Now, we talked a bit off camera. If I bought a house in March 2020, one of those great souls, and it was a really competitive, incredible 2.75, let's call it 3%. My rate was real low historically. What can someone do now if the rates are more than double? How do they handle that sticker shock? What do you tell them? How can that be navigated?
There's a lot of sticker shock going on right now with people, and it really depends on what their goals are, what they're trying to accomplish. Is it their forever home that they want to stay in? And is it worth them using some of the equity to do something else? Is it a house that they're trying to sell? Is it one that they want to hold as a rental? Really, it all depends on what their personal goals are with that house. And if they've made the decision to sell it, then there's the issue with finding a buyer who's willing to pay the rates that we're at right now too. And the big thing that everyone keeps talking about in my industry is that people should just go. I mean, if you can afford to buy the house now is going to be your best time, because as rates start to come down, you're going to have that many more people in the market trying to buy the houses that are on the market.
Right. One other professional I talked to had a great insight. I want to share it with you. If I'm a first-time buyer and the rate is 7, and you have a bunch of equity, let's call it $200,000 or $300,000, and the rate is 7, I don't know why they're being compared. In your case, you have equity that really, you didn't earn, you didn't work for it and save it. You just slept in the house and ate breakfast. So I don't know why people are not thinking of their equity as a real hedge against those increased payments. Where, like people say, we're not the same. For me, it is about first-time buyer, 7% is 7%. For you, right, you got this magic money, and in America, that's tax-free income and pure profit. So why isn't that ever talked about?
Yeah, that's the one big benefit that people have right now that they're not even thinking is, yeah, you may be paying 7%, but you can buy that house and put that $200,000-$300,000 as a down payment, and your payment's not going to change that much. And if it is going to change that much, it's because you're upgrading into a bigger house, you're in a better spot. You've got all that equity to use, so use it for your benefit. Whether you want to stay in the house and use the equity just to lower some credit card debts or whatever, or you're ready to move and you're going to use that equity towards your next house. That interest rate, it's the cost. I mean, renting is 100% interest, right? So it doesn't matter if your interest rate's 2% or 7%, you're still gaining equity with whatever you're paying that interest on.
I like that, but even that, you're talking about a bigger down payment, so lower loan to value. That makes sense. However, I'm thinking, even if you still put 10% down and borrow 90%, you have this money. It's like your own line of credit.
Yeah.
That if the payment is double, why wouldn't you just tap into that to get really to your next move?
Yeah. And you definitely could do that. You could use and set that money aside as a reserve for whatever you needed. And then if in the future rates do come down, you always have the opportunity to refinance it. But you have that free line of credit, like you said, because you have equity in your house, basically.
Right. And people, I know the real reason, because they think if they got it, they want it. That's they're, I don't want to say negatively greedy, but they think it's their birthright. I got it. I want it. They don't understand it's really an economic tool to be used.
Mm-hmm. Yeah. And I mean, a mortgage on your home is a huge financial tool for you because it's a tax. The wealthiest people in the world have 30-year mortgages on their homes because it's a tax benefit to you to be able to write that interest off.
Mm-hmm.
So really, if you look at it from that point of view, the low interest rates are doing less for your tax benefit than what the rates are now too.
Yeah, good point on that. Now, also using that equity seems to be a little bit of our theme. Why would you ever sell your house competing with other sellers? Why wouldn't you offer the buyers a lower rate, put the maximum amount of closing costs attributable to the buyer and have them have a lower rate so it's easier to buy, and plus your house would stand out? What do you think about that?
That's one of the classes I'm actually doing next week for a local group of real estate agents is the 2-1 buy down, which I think we talked about a little bit before when we've talked. And the seller has the ability, instead of lowering the price or whatever they're going to do, just give a bigger credit to the buyers to allow them to buy their interest rate down. So then you're not losing out on profit because a price reduction is going to cost you more in the long run than just giving some more credit to the buyers for closing costs. So that's a very good tool that they can do. So that way the buyers can afford to buy your house and you can move on to your next one if that's what you want to do.
Right. And I don't love the 2-1 buy down because its nature is temporary. Why not just lower the rate and keep the rate for the buyer? And but you tell me, what's the maximum usually the lenders allow for buying closing cost credit? What's the max?
It varies depending on program and depending on what type of lender you are. So me as a broker, I can't do any more than a 2% rate buy down, which is not 2% to the interest rate, but a 2% discount fee towards the interest rate. And depending on the market, that's because it's not a 0.5 point discount fee automatically gets you a 1 point credit buy down, or vice versa. It's just depending on the market that day. So that may give you a 1% lower interest rate. It may give you a 2% lower interest rate than what the market is, but it all depends on where the market's at that day. So
right. Well, I've heard
a permanent buy down over a 2-1 buy down, it's more beneficial, but in some people's situations, the 2-1 is the way to go.
Right. I get that. But you mentioned you're teaching realtors. Now, here's what's clunky. Here's my view. To me, teaching realtors to do that and have that conversation is a challenge because you're not going to be there. And the buyer's agent has to have enough of an appreciation and then be able to convey that to the listing agent. We don't know their level of experience or even appreciation for this tool. And then we don't know how the listing agent is going to explain to the seller who says, "What? I never heard of that. Why am I giving any money?" That it's a lot of friction and moving parts.
It's a listing tool that we've been teaching agents that as the listing agents, they're offering a 2-1 buy down on their listing itself. It's saying, well, you're giving whatever maximum seller concession is. And then I've got some flyers and things that I hand out. And then I'm offering to talk to their buyers agents and whatever to explain how this works and hopefully get the buyers financing out of it. But it's a tool to, instead of dropping the price, it benefits everybody because the real estate agent doesn't get a lower commission because it's based on the full sales price. And the sellers don't lose any more than if they would have price dropped. They can give that as a credit.
They don't, exactly. So the sellers don't lose real money. That was imaginary money.
Yep.
But listen, I like what you said, because instead of being the buyer and asking for this, you're talking about the listing agent giving it to the seller offer it. Now, what buyer would say no to that? So
exactly.
Right. So it's not even, so it's so much. And I hear a lot of mortgage brokers that don't take your approach. They always are of the nature of, hey, ask for it. And then you have all those 1, 2, 3, 4, and the telephone game. Think about how it would come out on the other side.
That's exactly the problem with on the buyer side, because the seller doesn't want to credit you 3% to buy your rate down or whatever that max, because the 2-1 buy down, we can do a higher amount. You can go up to 3% total. So the seller's not going to understand that. So then me as the mortgage person, am I going to actually get in touch to talk to the listing agent and the seller? Probably not. And then you have your telephone game problem where, oh, well, the lender said this, and then the lender's agent said this, and this said that, and it never comes out right when you go.
Plus, you're competing against other offers that are not asking for anything. So it's, to me, when these mortgage people tell me they've done it, I kind of wonder if that's even true, because
Yeah.
it seems to be, it has to be like the best case scenario with no obstacles for that to happen.
I think I've only had one or two that came from the buyer's side over the last year or so, because it's hard. The seller doesn't want to give up that money, but approaching it from the other side, as on the seller side and as on a listing, it gets more activity I've seen in people. And even if they don't want that as a 2-1 buy down, they can come in and know that they're willing to pay closing costs or something of that effect for that.
Totally. I completely agree. That's the only way. And why wouldn't, when a buyer is looking for a house or asking a broker to help them find a house, if this one comes with a rate, now think about this. Every Jeep commercial you see tells you $369 for lease. They tell you the dollars. So if like in the old days, remember your realtor flyer sheet says 80 LTV, 90 LTV. So why not put even a speculative notion of this house? Buy my house, you'll have a lower payment than the same price house. That's the greatest marketing there is.
There's flyers that we've done for open houses that show how that 2-1 or even a permanent buy down would work on that specific house. Granted, it has to have all of the, your credit score has to be this, and you have to do this, blah, blah, blah. But it can show you that this buy down is willing to work in the buyer's benefit. Even when I bought this house that I'm in right now, the seller had offered to pay $20,000 towards flooring. And I said, how about we take that $20,000 and put it towards my closing costs? And I use that to buy my interest rate down, because I can do flooring anytime. I've got that $20,000 of free money. I might as well use it to lower my interest rate. That's going to save me money over 30 years instead of
definitely
just getting new floors right now.
But that's you, who knows? The point is, you got to go ABC. It has to go from you to realtors who can offer this to to sellers. But then I'm thinking, why not? And I've done this, and you and I can do this. Why not be the listing agent and say, listen, let me get Jessica on the phone, and now you're the other person, you're the pro. Instead of explaining something like, it's like me telling you about flying a plane or scuba diving. I need to put someone on the phone, right? So why doesn't the listing agent put you on the call and say, here, I have an expert, and she will tell you that's how you do it to gain an advantage and speed this thing up.
And that's the service that I provide to the agents that I work with. They know that they can get me on the phone, and I will explain whatever it is that we're trying to accomplish on my lending side when they're putting offers in. But again, that is still the telephone game of going through multiple people to get to the answer.
I think that's going to be really the only way in the future, because these rates may not change. And even if they go down a bit, you're still talking about a way huge inventory shortage. Are you at all, I don't want to digress in this, but are you aware of the Department of Justice lawsuit that's going on right now?
I'm not.
Okay, so this is a whole big thing where it's starting, and it's really the United States government is trying to change the way buyers agents are compensated. So
I did know there was talk about that in Washington State, that the buyers would have to pay their own buyers. Like, it went into law last year, and then it hasn't really.
And that was a statute. But this is going to be a complete removal of that policy that we all know about. So that means that your services are going to be even more important, because you're not going to have the chance to deal directly with buyer's agents, because the buyer's agent, if this happens, is not going to get automatic payment through MLS. So I think people are going to go much more directly to the seller, because they're going to say, I can't pay 2% for this. They're going to look at it as a saving money measure. So I think it's even more important for the lender to have a deeper connection to the seller, because the seller is going to really call the shots on how these houses are being sold these days.
Interesting.
Right? I mean, think about it. If the buyer doesn't get an automatic free realtor sent from heaven, they're going to be much more consumers than clients. Yeah.
I 100% agree with that. That's kind of going to change a lot. That's going to change the whole. It's going to change
the entire paradigm. It's going to change everything. But I think it's actually positive, because you realize, I mean, every deal, and I know people are going to hate me saying this, every deal has extra money. They're adding more to the price and more to the loan. So, but that means if people are really, really need to get some assistance. I mean, think about it. It's like going to a store. If there's no buyer's agent, you are the store. You and the seller and listing agent are the store, and I got to go to you, and you're giving a good price for the loan and the house. So I think your role is going to be more important with listing agents and sellers.
Yeah, that's accurate. I agree with what you're saying completely. I had not heard that that's going on nationwide. I just knew that they were talking about it in Washington at the beginning of last year. Well, it was right about the time I did my CE last year, so it was the beginning of this year.
Hmm. Well,
But
the nation's best lawyers are fighting for that. The United States government wants, imagine the government wants you out of the deal if you're a buyer's agent. Yeah.
no,
Yeah.
no, thank you.
Yeah.
That's scary.
Right. I mean, how would you want to face those odds?
No,
So we're talking about really an increased role of the lending industry with regard to sales, right? It's always been kind of on the sideline. Of course, you need a mortgage. You know, you want a house, but you need a mortgage,
right,
right?
right,
And the agent gets all the kisses and you get all the aggravation.
right.
Right?
Exactly.
But you're the
I'm
one
the
that
one
brings the money.
requesting too many documents and asking them to not send me pictures with their fingers over everything and all that kind of stuff.
Right. And you tell them you can't buy that furniture until you own the house.
Yeah, don't go get that new stove yet. It's not time. Not till next week.
Right. Well, you know, it's a shifting market with regard to prices, and there are some areas, like I know in my area, there are bubbles. So there are areas that are totally protected. In an area where it's cash, like people coming from the north selling a house and avoiding winter and then going to North Carolina or Florida or Georgia, where there's no state income tax and there's nearly no winter. These are cash areas.
Yeah.
So prices have stabilized and are still going up because there is no inventory. So it's really immune to the day-to-day, information. And that's why people like you have to really advise people, because you turn on CNN and you hear about interest rates. It doesn't apply to different places, right?
Right. Exactly. There's certain places, and even we have a lot of cash buyers up here that come from other countries and are buying stuff. So not necessarily the people that are looking to come winter here, because we do have a lot of winter here, but we've got our market is fairly stable. I had a couple even within the last 6 weeks that have been getting outbid by cash offers on stuff from people coming from other countries with money. So there's a lot of foreign buyers in our market up here.
Yeah, I mean, and there's no way to avoid that. You know, there's some laws in place. I know that in New York and parts of Miami, they want members of an LLC to be identified now, whereas before that was the whole point. That hasn't hit the rest of the country, but before, people were hiding behind investment properties and shielding all kinds of assets.
Mm-hmm. Yeah.
That's interesting. And what would you say about, you mentioned rentals. Now, as far as instead of selling your house, rental, I think that so few people are even capable of being a landlord.
And I think that's the biggest issue. I think people are seeing it as, yes, there's going to be good cash flow with this property because they're in that 2020, 2021 real low rate, whatever they got, sub 3% or whatever. Oh, my property will cash flow. But then they get their first tenants in. And this actually just happened to one of my customers. She decided to keep her house and buy the new one with her new husband. She rented hers out. The tenants weren't even in there for 6 weeks, and they already had issues. The tenant had dogs in there that she wasn't supposed to have, and people, and the neighbors were complaining, and this was broke and that was broke. And she's like, I lived in this house for 4 years and had no problems. And I'm like, yeah, but you weren't a renter. It was your house. And people don't realize all the work that goes into being a landlord. And you can choose to have a property management company. They're going to take a chunk of your profit. And the other experience I've had is my friends had a property management company. The garage door wouldn't open, so they sent a garage door repair guy out who replaced the whole thing instead of just fixing whatever little part was wrong.
Sure.
And sent them the bill for $1,500 to replace the whole motor on it. So there's a lot of unknowns that I don't think people realize. Like, becoming a homeowner has more expenses than most people think about. But becoming a landlord is a whole nother ballpark yet again.
It's a whole nother. I mean, I'm a landlord, and I now have a tenant, and I've had tenants, and I'm a tenant right now. And I'll tell you what, I mean, I have some great people, but if you want, we could spend 16 hours me telling you nightmares.
Oh, I can tell you about the lawsuit I just went through with my tenant. So yeah, I know about it. It's not fun.
We've had lovely people too, but it's a matter of, I ran a summer place and the water's too wet and the sky's too blue. It's too crazy. Yeah. So, and even the tax consequences, you have to have another whole set of eyes on this.
Yes.
So I kind of get annoyed when realtors, rent it. I mean, this guy's, he's a cop, she's a nurse, this guy's a lawyer. Who's ready for this? Nobody, except for real seasoned pros.
there's a very finite group of people that are good landlords and good people, and they've got the time. And the rest of us are just regular people who don't have the time to deal with everything that we would need to deal with when we have a tenant in there. Like
Absolutely.
I agree 100% with that. And I've seen it personally in the last 6 months of somebody deciding to keep it as rental. And within 6 weeks, it was no good for them. And now it's on the market.
Let's say there's no problems. You need different insurance. You need different,
Yep.
I mean, it affects your, I mean, you have to have a whole different tax approach. And
You have to
I
keep
get
that
annoyed with
security deposit in a separate account that you can't touch. You have to manage all this other stuff. Like there's rules that you don't think about just saying, oh, I'm going to rent it.
I know. And there are areas I know in New York, this is getting, I don't know if you knew, New York City just banned Airbnb.
I had heard that.
So there are doormen and other people that were called in to testify. We're talking real stuff here. And then they want you to register on Long Island. They want you to say, I'm a register. Here's my property. Here's my name. The Smiths are coming these 2 weeks. The Jones are coming this 2 weeks. It's full open, transparent. It's not like the old days, and then so I get annoyed with the realtors that talk about just rent it.
Yeah, I agree with that comment. And it's a lot of people, even the buyers or the homeowners mindset too, is like, oh, it's just going to be easy. I'm just going to rent it. And then not that and maybe it'll work out. Maybe you'll get those perfect tenants that pay their rent on time and they never have a problem because they love your house. But there's a lot to go in with the just rent it comment.
No, even if you have a great tenant, you got to paint it. You got to make it presentable. You have to make sure the appliances. I mean, you can't blame the dishwasher. My dishwasher is 19 years old, and the guy's like, "It's dead." I go, "Okay, it's dead. So I got to fix it. I got to get a new one." Yeah. But what's your thought even on the legality of it? Where I buy a house in 2020, it's primary residence. I get the best rate, and then you all of a sudden turn into investment property. What does the bank think about that?
The legality of it is the deed of trust and the note that you signed says you're going to live in the house within 60 days of signing, and you have to live there for at least a year. As long as you've lived there for 1 year, there's not any consequences in general, most mortgages. There's probably certain programs, like if you were to do a grant program or something from the state, they have requirements that you live in the house the entire time.
That makes sense. But I got to tell you, that surprises me because if you're a savvy investor, you may just sleep there for a year or even put your utilities there for a year, maybe a pillow, maybe a frying pan, and I live there.
Yeah, it's definitely can be interesting, but you can buy a new primary residence once a year. Now they will look into it though. If you're doing too many back to back, they're going to start investigating to see if you actually live there because that's occupancy fraud and that can get everybody in trouble. Oh,
sure. But I know my friend, because you know what he said? He goes, the best way to stay out of anyone's hair is pay the mortgage. And then no one cares, you pay it. And then people, but I got to tell you, you just taught me something. I thought it was more than 1 year. I thought it was about 2 or 3 minimum.
Yeah, it's 1 year for the actual note and deed of trust itself, and then your other issue is going to be if you ever go to sell it and you want to do your capital gains tax.
That's a good point.
That's 2 years is capital gains.
Right, 2 of the last 5 years. So that's it. So you have to actually live there a year, rent it for 3 years, live there year 5, and get the 500 if you're married thing.
Right.
Wow.
Right. Yeah.
You better have a good moving truck to do all that stuff.
That's a lot of moving in and out of the same house, it sounds like to me.
Unless, you come in with your own, just tiny bit of furniture, just in and out. That's interesting. That's good to hear. So, I mean, this is the type of really, really, I call it esoteric information that realtors should be conversant on. I mean, we're learning now. There's no way you could tell me that the masses know these type of sophisticated approaches.
No, definitely not. And that's been my goal this year is to hold educational classes. I've been doing it once a month locally in person and inviting real estate agents just to kind of open a conversation. I do a little 30-minute presentation. It's usually a 2-hour event where we're just sitting and chatting and talking about different things they're seeing in the markets, just to get different people's opinions on what they're seeing and what they know and what I know that could benefit them and how they're marketing and how they're doing their business.
Right. And they bring some facts to your attention. Mm-hmm. I really always relish a mastermind like that, where you can, in a calm exchange, a nice exchange of perspectives and discourse. You could even disagree, and maybe get some tax professionals in there, get a few other authorities who can assist.
Yeah, because I mean, not one of us is an expert in everything. You're probably good at one or two things, and you need other people around you. Masterminds are one of my favorite, to get just a group of people, and even mortgage people in different areas of the market have different opinions and different insights on how things work. So I love getting together a good group of people and asking questions.
Yeah, I've always loved that. I ran an organization for a long time in the past, but there's even so much to know. I mean, I'm seeing that with FHA, you could go down to a credit score of 580 and 10%, and all these. What's the DSCR loans? I mean,
Yep.
give us a little bit idea about that.
Yeah, the DSCR, they're called debt service coverage ratio loans. They're an investor loan, so it has to be a rental property. And what they're going to look at is, depending on the lender, they want a 1-to-1, at least a 1-to-1 ratio of rents that you're going to receive versus what the mortgage payment is in total. As long as you have your mortgage payment under what the rents are that you're going to receive, they will finance that. That's all they need for income. They don't look at any tax returns, W-2s, anything
Really?
like
So
that.
it's not even an asset based?
It's just based on what it's the service coverage ratio. So as long as that rent covers the mortgage payment, that's what they're looking at. They want to see that you have assets to make sure that you have reserves or whatever if when your house is empty. But I've done several of them this year where you're just looking at what the rental income is on that property.
Right. Well, I'll use an old fashioned sexy term. Remember the pity wash? That was. Is that really what we're talking about? The same thing?
Yeah, basically. Basically, you're looking at make sure that it's covering your principal, interest, taxes, and insurance. And as long as your rent covers it, you're good to go.
Wow. So, I mean, and how's that different, if at all, with the non-QM? Is it non-QM only for primary?
So it is a non-QM program. That one's an investment program. So the other non-QM programs are like when they use bank statements and just take your average of your 12 months deposits or whatever, even stated. I personally don't do anything that's just stated. I want proof that you actually make the money. I was around in 2008. Don't really like stated itself, but they're programs for the right people.
So there is even any stated today?
I haven't done one. I know I've seen a lot of posts in all of my different broker groups and things about it. I haven't personally done any that are just stated. So I don't know what the terms and the regulations are.
Yes, it's a little bit, of course, that's a horse of a different color, but the realtor should know, depending on, let's say, a business owner, what they might need.
Yeah, exactly. And there's 1099 programs now where they're just looking at what you made on your 1099 for 1 year. That's a non-QM type program. There's a lot of, and then you have the asset depletion programs also that look at, say you have $10 million in an account, you can use that as an asset depletion and get.
Well, that's not me. Not 10 million, right?
Neither.
Well, that is so. You know why that's interesting to me? Because I got to imagine there's so many renters with good, stable income that don't know that they could buy.
Yeah. Well, and especially like the bank statement, the 1099 program right now are really good for self-employed people because we all want to write our taxes down to as low as we can get them. So we're not paying the government any more than we have to. And then you have, $40,000 a month in deposits. They just take a expense ratio. So like the last one I did, he owned a auto repair shop. And so we could use 80% of his monthly deposits. And he was in a high end where they do race car builds and stuff like that. And so he was depositing upwards of $100,000 a month. His taxes showed he made $2,000 a month. And so we can take 80% of $100,000 as long as it's averaged over the year. And he could qualify. He bought almost $1 million house. And he can
and that's legal. That's legitimate. That's not even a scam. That's great.
Yeah. It's legit, and it works really good for people who are self-employed and can't qualify otherwise.
That's something. I mean, so tell me a little bit of history. Did these non-QM loans come as a result of the Dodd-Frank and 08 mess?
Yeah, they're different because we used to call them subprime back in 08. They were the fog and mirrors loan. As long as you could breathe, you could get a home type thing. Now they have more restrictions. They're looking at more stuff with them, but they've kind of evolved from the Dodd-Frank stuff, basically, and how you can do it.
Well, it's great that the name changed because, I mean, subprime is just a bad word. I mean, that's it's like the Civil War or like the, nuclear option. It's just bad. I'm glad they got rid of that term.
Yeah. I think non-QM is actually, QM stands for qualifying mortgage, which means it doesn't have to meet all of the conventional guidelines for that loan. Right.
That's a really neutral term. And, people, when that QM came out, people thought, wait, doesn't everyone have to qualify for a mortgage?
Right.
It was no. But that's, I think education is paramount. I mean, this is why you need to have realtors in on these type of these sessions. And what's great about this PlugIntro platform is we're recorded. The information may change, but until this is an evergreen topic, what we might be talking about in the Christmas month might be different. But the realtors can't come to every mastermind. They have kids, they get sick, there's snow. But this is the kind of thing that realtors should see. They should even at least prompt more inquiry as to how they can serve clients and how they can pass this information on.
Yeah, I agree. I don't expect real estate agents to know all the intricacies of all the different programs, but I think they at least need to know that they're out there and what benefit they could bring to their clients with knowing that these programs exist for people.
Right, even to start a conversation.
They can buy a house.
To start a conversation, then put you on a three-way and wind you up and let you do your job.
Exactly. That's what I love to do. That's what I want to do.
That's powerful. I made PlugIntro so I could meet who I should know for myself as an associate broker with Real Brokerage. I didn't have a chance to meet as many people. It was coming out of COVID. People were not getting out. So I believe that the power of loose connections makes us meet more people. And I don't know my best friend's clients. I don't know my clients' best friends. But with bringing them into your Facebook group, which is a platform really like Airbnb and Uber, where there's an even exchange, you really gain, you have about 300 plus people in your group. That's a nice audience for you and for others. So we're forming now a business group around you. You'll be the only lender, but we're offering others a chance to be the exclusive provider of their services. And they really stand out. They have a tighter group of committed people. They're featured, and it's like being on Broadway. They're on stage, and the others are in the audience learning more about them.
Well, and it's great because we don't, like you said, we don't know who we don't know. And you might have knowledge that I need to know, and I wouldn't know until we got together and had a little conversation. So I like getting it. The more people I can get in front of and just, I don't know, be me and talk.
Right. And look at this. I met you through various friends of ours, professional connections. And it really never ends. You go to a meeting, you meet people, you go to an event, but raising kids, having life, you can't do that every day. But in the online digital setting, you can, and it lives on your phone. And I've heard people are oftentimes very close to their phone, right? Actually, usually, maybe the only time is when you're showering. I'll give you that.
I don't know. I was listening to a podcast from my phone on the counter when I was
right. I know. If there's a call coming in, but you got to give you some space. And listen, if these phones were waterproof, they would go in the show.
Yeah, it would be bad. It would be really bad.
You don't know what you'd see or hear. So it
could be a bad Zoom call right there.
Right. We've heard about that stuff. Well, let us know more. How can we hear you? And we want to continue this dialogue. What's the best way to reach you?
You can reach me on any social media. You can email me. Text me. My link tree, I will give you my link to my link tree, has all the way to contact me. I have a Calendly link on there. That's the easiest way to schedule a one-on-one with me. But text, I'm available 24/7 on my text. Like you just said, my phone's always near me. But I have my website, Facebook, pretty much anything. But Linktree's got all of that information, so I'll make sure you guys have it.
Mm-hmm. I really think you're a pro. I love how you deliver the information in such an understandable way. I appreciate it because I've had struggle myself where, listen, what's going on with this insurance deal? Insurance is another runaway train right now. It's a runaway train. So, I got to tell you, I was at a meeting yesterday. The insurance guy was blowing me away.
Yeah, I don't understand. Insurance is like I know that I need it and I know that it covers my house or it covers my car, it covers me, but insurance is one of those things that none of us actually understand.
No, it's another language. So, we have insurance guys here or women too, who are pros who really give a good analysis. So let's continue our mastermind. I thank you for hosting the platform. You personally are going to give a lot of people a great opportunity to promote themselves. Our instruction is to promote yourself. Let us know more about you and then instruct others so the group grows and we gain much greater local exposure.
I'm happy to do it. I'm really happy to have more local pros around here and, introduce myself to more people and get to meet more people.
Yep. And we have a staff here. We work 24 hours a day, 888. Me, Sophie, and Gabriel are 888. So I say people, we do what you can't do. You got to sleep. We don't sleep.
Exactly. I got to sleep. It's needed apparently.
I don't know. So thank you, Jessica. Talk soon.
Yes. Thanks for having me.
Great job. Take care now.